your business, especially your personal tax planning. So actually, this is year which has some serious changes, especially for NI and dividend rate. I believe you have already aware of this. So I try my best to cover all the personal tax topics in today's webinar. However, if you have anything you'd like me to elaborate on details, you could use the Q&A facility and list all your questions, and I would like to go through it one by one in the end. And during the webinar, please mute yourself to make sure the session won't be interrupted. So first thing first, still I would like to say something about the income tax rate and band. As you can see in here, compared with last year, there's no any changes of the income tax rate and band. The basic tax rate is still 20%. It is from 0 to 37,700. And this 37,700 is above the personal allowance. So if you want to know the total of the basic rate, you need to plus the personal allowance. So I don't want to make any confusion in here. And higher rate is still 40%. So it is from 37,701 to 150,000. And any additional income above 150,001 pounds, it's in the additional rate is 45,000. So that is the threshold and the band. So there are small changes of different allowances. The personal allowances has no changes, it's still 12,570. Marriage couples allowance still 10%. Means that if you have a spouse whose income is below the personal allowance, they can transfer you maximum 10% of her personal allowance for you to do the tax deduct, help you to save some tax from your personal income tax. And the only changes part is the blind person allowance, which increased from last year 2,520 to this tax year is 2,600. So I would like to highlight in here. So if you get personal allowance on taxable income, you have no personal allowance if your taxable income is over 125,140. But I still want to emphasize in here, you always can use your pension facility to help you to deduct you adjustment income. For example, if you have personal income this year of 126,000 means that you have no personal allowance. But if you choose to put your the amount above 100,000 means 27,000 that part into your pension pot to do your personal to do your pension contribution to make you an adjustment income reduced to 100,000, you have you can have the personal allowance, which is 40 amounts. So so pension facility is a very good way you can use to help you to make the income tax more efficiency. So next one is the personal saving allowance. You can see there's no changes for the basic taxpayer. You can have 1,000 as a personal saving allowance, and higher rate taxpayer will be reduced by half. And if you are additional rate taxpayer, unfortunately, there's no personal saving allowance could be used in here. And another similar thing is starting rate for savings. Still no changes, but I still want to review it to remind you you could use it. So what is the starting rate for savings? It's different from the personal saving allowance. So you might also you may have get up to 5,000 of interest income for tax free. That is your starting rate for savings. But the more you earn from other income, for example, your salaries, or you have already retired but you get pensions or any other income, dividend, etc., the less your starting rate for savings will be. So where is the boundary? So there are two boundaries. So the first one is important. If your other income is 70,570 or more, you are not eligible for starting rate for savings. But if your other income is less than 70,570, your starting rate for savings is maximum of 5,000. But how to calculate it? So from your personal allowance and every £1 of other income above the personal allowance, it will reduce your starting rate for savings by £1 as well. So on one hand, you increase £1, other hand, you will reduce £1 until the 5,000 will be reduced totally. So I'll give you an example to help you understand it in details. For example, you earn 7,000 of your salary, and you get 200 interest on your savings, right? So you have a personal allowance, which is 12,570 for this current tax year. And you can use up by the first 12,570 of your salary. So there are remaining, if you use 7,000 deduct your personal allowance, the remaining part is 4,470, right? And then you can use this amount to reduce your starting rate of savings. And then what you can get from your start rate of savings is 570, because you use 5,000 to minus the 4,470, right? So how many interest you've got for this year is 200. It still can be covered by your starting rate for savings. So you do not need to pay any tax on your saving interest. So it makes sense, right? So the next one is one of the most important changes. One of the biggest changes for this tax year is dividend rates. So there is no any changes for dividend tax-free allowance. It's still 2,000. Means that no matter how much the other income you've earned, as long as your dividend is not above 2,000 cap, the dividend you get is is entirely tax-free. Any part above £2,000, if your other income puts you in as a basic rate taxpayer, so you for this year you get 8.75% on your earnings. So compare with last year 7.5%. This year they increased 1.25% on the basic dividend tax rates. Also, the same increasing applicable into the higher rate as well. So previous year is 32.5% on your dividend earning, and this year is 33.75%. And anyone who above the who is in the additional rate taxpayer is increased to 39.75% if you are additional taxpayer. So that is how the rate increased, and also give you an example to help you understand further. You get 7,000 in dividends in 2022-23, and the dividend allowance is 2,000. So means that deduct this 2,000, there are 1,000 is taxable, and other taxable income is 35,000. So once you see this, add your dividend is 3,000. Your total taxable income is 38,000. But because you are, according to the 35,000, you are basic taxpayer. So means that this additional 1,000, the rate you need to pay is the basic rate of the dividend rate is 8.75% on this 1,000 of dividend. As I said, because taxable income is within the basic tax band. So the total tax you need to pay for your dividend is 87.50 pound. So yeah, the good news is the trading and property allowance has no changes. You still can get this 1,000 from each income. The first one is the trading income, and the second one is the property income. This two is not you get one and you can't get one another. No. If you are the landlord and also a self-employed, you can get both of them. Yeah. And I would like to highlight another thing here. There is even if you are a landlord, there are difference between rent out your property and you rent a room, because there is another scheme called the rent a room scheme. It's much generous than the income the allowance of the income from property. Because if you are a landlord who lived with your tenants, means that you have a lodger in your property, you live together, you can apply for the rent a room scheme, which has 7,500 in total each year. It is totally tax free, and you do not have the obligation to report it to HMRC if your annual income from your lodger is less than 750. Sorry, 7,500. Sorry. So this is much more generous than the income allowance from a property. So if you are a landlord who have a lodger, use the rental room scheme rather than this allowance. Okay. But this scheme cannot be used at the same time with the property allowance. You have to aware in this as well. Oh, then another biggest changes is the national insurance. Because this is a personal income and self-employed tax changes, so I only cover the class 2 NI and class 4 NI in here, because that is the two that is a type of NI regards to the self-employed. So class 2 NI is there are a threshold for these two type of NI. The first is class 2 NI. In here you can see if you are under the class 2 NI threshold, you do not need to pay any NI contribution. But if you are your annual turnover is above the threshold, you have to start to pay the class 2 NI. So last year, the threshold is 6,550, but for this year is 6,725. You can see the threshold has increased. However, if you above 6,725 for this year, each week you need to pay 3.50 a week as class 2 NI. Compare with last year, £3.5p. They increase 10p each week. So if your annual turnover is above the threshold of class 4 NI, you need, instead of paying the flat rate, you need to start to paying the NI by rates. So the starting point of the class 4 NI, the last year is 9,568, but this year, luckily, they increased the threshold to 11,908. Anything in between from your threshold to up to 50,270, you need to pay the rate at 10.25% on your profits. And anything above 50,270, you need to pay the further 3.25% on the profits, which over. Yeah, that is the class 2 NI and class 4 NI contribution for the self-employed. If you would like to make the NI contribution voluntarily, you're entitled. You need to applicable with class 3 NI, which rate is increased as well, but not that much. So previous year is £50.40 each week, but from this tax year is £50.45. So you need to be aware of this increasing. Capital gain tax. There's no changes compared with last year. So if you have any capital gain and you're a basic rate taxpayer, the gain from the residential property, the rate is 80%. on your gain income. And any gains from other chargeable asset is 10%. However, if you are a higher taxpayer, you need to pay 28% for your residential property gains, and other chargeable asset gains is 20%. So there's another thing I would like to highlight in here is the business asset disposal relief. Previous name is entrepreneur relief. Means that if you would like to sold out your business, shut down your business, no matter what reason it is, you can get the business asset disposal relief, which is 10%. You can see no matter how much you get, it remain the 10%. But there is a life limit is £1 million. Means that if you sell a business up to £1 million, you're entitled with this business asset disposal. This is a lifetime cap. So in the entire whole life, you cannot above this cap. Otherwise, it will be returned back to the normal rates. And the other thing is this lifetime limit is 1 million. It's only for until this tax year. From next tax year, it will be back again to 200,000. You can say it decreased much further. It's back to 200,000. So if you have to or have any other reason would like to close your business, close it for this year rather than wait for next year. If your business value is above 200,000, so you can use up this 1 million lifetime limited for this tax year. And if you are selling the properties, you must report and pay any capital gain tax due on the sales of the UK property within the 30 days of selling it, if the completion date was between 6th of April 2022 and 26th of October 2022. Any selling completion date after this, and you need to report it after 30 days, 60 days of the selling. So this is a timeline you should aware of. And pension, as I mentioned before, there's no changes for this year. You still have annual tax-free contribution limits for 40,000, and your life tax-free allowance is still 1,073,100. So you need to be aware that if you have annual adjusted income of over 240,000, this annual allowance will be reduced. And how to reduce? Your income increased every £2, it will reduce £1 from your annual tax-free contribution, this 40,000. So you need to be aware of this if you are a high net person. Zero emission car allowance. From last tax year, customers, the HMRC asked the customers will need to provide the details of any zero emission cars or electric cars purchase, and the first year allowance can claimed when completing their 2022 to 2023 tax return. So what is the first year allowance? You can claim 100% first year allowance, means the full cost of your zero emission car or electric cars, full amount deduct from your business profits. So but if you use a car outside your business, for example, you have 20% private use of your company car, you must reduce the claim in proper proportion of the non-business use. So means that for the 20% of the private use, you cannot include it into your first year allowance, and another 80% you can do it. So I will have a further explanation in here. So if you company buy a company car, you cannot deduct its cost directly from your company expenses. Instead of doing it, you can use your first year allowance to make the deduction. This is so-called capital allowance, if you've heard about it. So you can use the first year allowance to deduct 100% of your electricity or your zero emission car through the first year allowance, and this is also can be deduct your profits. It's the same, but the in the accounting perspective, you just cannot directly deduct it from your profit and loss account. Does it make sense? Yeah. So as per new year changes for our DNS accountant have a free accountant software Nomisma provided to our client. It has already applied for the new year threshold rate allowance and applied to the new tax calculations. If you have a needed of accounting software and would like to use it for free,
Malik,
and you can contact me. Yeah.
Malik.
So this is all for today. So now, if you have any questions or would like to understand in further details of any topics I covered today, you can list it in the question Q&A, and I will go through it one by one.